It's time now for an in-depth look at stocks and the economy. And for that, we're joined by Dr. Yang Junseok, professor of economics at the Catholic University of Korea. Dr. Yang, thanks for coming on today.
Happy to be here.
Well, the U.S. has changed course on rates and earnings strong from big companies. Stocks in the U.S. on Tuesday were mixed, but the S&P rising to another new high. What's behind the rally there, and is there momentum to keep it going?
Okay, well, despite all concerns, the chief indicators for the United States economy seems to be doing well, namely unemployment, inflation, and growth rate. The first quarter growth for the United States came in at 3.2 annualized percent rate, and that's much higher than expected, which was around 2.3%, and it's also much higher than the fourth quarter growth, which was 2.2% annualized. And consumption was especially higher than expected at 1.2% growth, and exports also higher than expected. So the growth rate, the U.S. economy seems to be stronger than people realized, and then the unemployment is still low at 3.8%. Inflation also remains low at 1.9% for overall inflation, 2.1% for core inflation. So the United States economy, despite all the worries, at least for now, seems very healthy, and it did better than people expected, so that seems to be behind the rally. The question, of course, is whether this will continue. I think most analysts, at least for now, doubt that this good luck will continue, but we'll have to see. And because of the better than expected performance, I think that was the reason why the stock market went higher.
Yeah, a lot of figures you mentioned supporting the rally there, but in Korea, a different story. We had GDP growth in the first quarter in negative territory. Then yesterday, we see industrial production and investment both up. Is that a sign the GDP situation and otherwise is heading for a turnaround?
I don't think it's heading for a turnaround. I think it's more of numbers being unstable at the moment. Now, being unstable is better than being on a downward trend, but most of the turnaround came because the February numbers for Korea was so bad that March numbers virtually had to improve. So overall, if you look at the entire first quarter, things are still not going our way, but at least there's a couple of good news in there. The first is that the consumption is going up, and the key to a turnaround, if there is any, is going to be consumption. And then the numbers, because they came back a bit in March, does mean that the numbers are not necessarily on a downward trend, but rather unstable. That means there's always a chance that things will rebound. It's overall, it's not that good a news, but it could have been worse.
Well, of course, Korean markets closed today. Japanese markets closed as well. But let's spend some time on Japan for a minute with their new emperor. In the new Reiwa era, do you see things going differently for Japan economically? Of course, they had a great deal of stagnation during the previous era. Will things be different going forward for Japan, perhaps in its relations with Korea, too?
Okay, well, during the last phase, the Heisei age, they had two big problems. One was that the bubble burst, which resulted in lost 20 years of Japanese economy, and then coupled with that was a demographics problem, which made the problem worse because, well, in order to deal with the slowdown in the economy, Japan had to lower the interest rate, and that really created a lot of problems with people's retirement plans when the old age part of the population was growing. Now, they're at least coming out of one of those problems because there's so many older people and very few younger people. Now, the Japanese economy seems to be facing a shortage of young workers. So at least from that point of view, their demographics problem may be getting a bit better. The younger people may have better opportunities getting jobs, which means they'll be more hopeful. The economy will be more stable, and their birth rate may even go up slightly. But the slow growth economy is still going to be a problem, and I don't see that working out in the near future.
Well, looking ahead this week, we have the Federal Reserve Open Markets Committee. We have the U.S. sanctions on Iran, banning their oil, that also taking effect, and that will affect Korea. Do you see that having any more influence on stocks, or is it priced in by now?
I think it's priced in for the most part, and it's not going to be. There's not going to be, I think, very many surprises. The FOMC United States, I think, because their numbers are better than they thought, they're going to take a wait-and-see attitude. They're not. They don't need to lower the rates. I don't think they're going to, in particular, hurry to raise the rates either, because, well, a lot of the future indicators do show that there will be a slowdown, and inflation is still low. As far as the Iran sanctions, the oil sanctions are concerned, well, Korea imports only about 5 to 6% of its oil from Iran. So Korea will be able to find alternate sources for oil, but they'll have to pay more, not merely because the global oil prices are rising, but Korea had been paying fairly inexpensive price for oil it's getting from Iran because, well, Iran had very few places that they could sell their oil to. So we'll probably be stuck with a double price shock in terms of oil, but I think that's already more or less factored into the market. So as long as there's no surprises on the horizon, I think most of these factors are already figured in. I think the big surprise, the big factor for the next week or two is actually the story you had a bit earlier about the disappointing trade surplus.
Okay, well, that's a number we'll have to watch. Dr. Yang, thanks. We'll have to leave it there for today. We appreciate your insights.
Thank you.